Hi, I'm Grant Mundell, investment specialist from Equity Trustees with our latest market update. Despite global equity markets finishing broadly flat in April, the month was anything but boring. The month was marked by significant volatility in global investment markets, primarily driven by the US administration's aggressive trade policies. Markets sank on the back of US President Trump's Liberation Day announcements, which introduced broad-based and higher than expected tariffs, but rallied later in the month after Trump announced a 90-day pause on those tariffs, ex-China, and news of trade negotiations emerged. The tariff announcements have created considerable uncertainty and reduced confidence in US policy and assets. In response to the turbulent environment, investors began reallocating funds towards lower risk options such as government bonds, the Swiss franc, and gold. However, traditionally defensive assets such as the US dollar and US treasuries have not benefited. Investors also switched out of US equities into other equity markets such as Europe or China. Continued uncertainty is likely to weigh on business and consumer confidence. Within share markets, the ASX 200 rose 3.6% in April, outperforming global equities, which rose 0.6%. The ASX 200's strong outperformance relative to the US S&P 500, which fell 0.7%, was notable. During the month, international investors moved funds into the ASX 200. The ASX is seen as less directly exposed to US tariffs and should be supported by interest rate cuts. All ASX sectors ended the month higher except energy. Communication services, which includes telecommunication and media companies, IT and property performed best, while energy performed worst. The energy sector sank as the oil price declined, negatively impacted by global growth concerns and higher supply from OPEC members. Commodities more broadly also fell, except for gold, which continued its stellar run. From a macro perspective, locally the RBA kept rates unchanged but noted rising risks around the global growth outlook. March quarter core inflation fell back within the RBA band of 2 to 3%, but the labour market remains tight. Markets are pricing in a high chance of a rate cut by the RBA in May and further rate cuts over the year. Over the weekend, the Labor Party was re-elected here in Australia. Government spending should continue and the housing market should see the benefits of Labor policies along with lower interest rates. While the hard data in the US has held up thus far, soft data or future indicators don't look as fruitful. Consumer confidence has fallen and economists are lowering their growth forecasts while inflation expectations have risen. Q1 reporting season in the US so far has actually been reasonable, but visibility remains cloudy. Following the rebound in equity markets in the second half of April, we continue to struggle to see value in equity markets. This, coupled with trade uncertainty and earnings risk, leaves us cautious towards equities in the near term and happy to retain a tactical overweight in defensive assets. I'll see you again next month.